Okay, here we go. So, in this video, I'm going to be going through the stock market, and I'm going to explain to you the situation right now and why the markets have been very bearish. This is the Nasdaq. S&P 500 is quite similar. So we've had the second market sell-off in the index of this year. Now, historically, I need to study the charts a bit more thoroughly, but on average, there's usually about 2 market corrections a year, aka a market sorry, a market correction where you'll see let's filter it to a month. So you'll have a market correction where you'll see 2 separate months, not 2 separate months, 2 periods in the year where there are 1 to 3 months of red candles of 12. And this is in a situation where the market is bullish overall and there isn't a recession. So that's essentially the situation here. Now, interestingly, I guess I'll need to weigh in on the details here a bit, but like, this is the biggest correction that we've had since in the index since the 2022 kind of bear market, where between January 2022 to December 2022 the whole market was just sold off. Like, there was nothing like that indicated that, you know, the markets were going to come back to return to all-time highs or even close to it. And this was because this was the quantitative tightening year by the Fed, where gradually throughout 2022 they would start to raise interest rates. Now, I believe this started in June 2022, but let me see if that's actually correct. Let's just see here. So yeah, so in June 2022, well, actually it was earlier than that. So it was really March where they started to hike the interest rate. Then by June it was above 1.5%, and then it just kept going up and up and up, and then it kind of peaked at 4.33% in hikes come December of that year. Then the interest rates still went up, but the market became bullish despite the quantitative tightening still being in play after December 2022. Now, why did the markets turn bullish despite the Fed still increasing the rates? Would have to be due to other economic factors. So what those factors would be, let me see if it's got something to do with the inflation rates. So if we go to the 3-year time span, so obviously inflation was in a dire state. However, I think come March 2023, which I think would be a safe time to turn bullish on stocks, the inflation rate had decreased by 4% from its all-time high. But obviously the markets were already bullish. Well, even then in December, for it to go to 6% is still pretty good. So I think the optimism really came come January, March to March, that was kind of where, and it just kept going down, and then it went down as low as 3% in June, which is pretty good. But unfortunately, since June, they've been struggling to get it below 3%. But I would assume now the markets would now turn bullish after the improved inflation data, which obviously just kept going lower and lower. Now, the current situation in the stock market is different from the one in 2022. Now, the inflation in the US is obviously a little bit of a debate. Some people think the real inflation rate is being obscured. Other people think that inflation is at a reasonable pace. I mean, based on what's reported, the inflation has obviously cooled down and it's not as bad as what it was in 2022. However, the Fed's progress in inflation there's no progress since 2023. You know, it's still at the 3% level that it was at in, I think, June 2023. So there's not been any progress in getting it below 3%. But also, it's worth pointing out the characteristics of the economy compared to from now compared to June 2023. So keep in mind that the inflation rate in June 2023 and June 2024 are the same. However, if you look at the unemployment rates, which is not here, unfortunately, but I might be able to get it up on here. Okay, it looks like they've got it here. So I'm gonna actually put this on my watch list if possible. I don't know if this will work, but it is worth trying. Okay, so the unemployment rate, as you can see, it's fluctuated a lot. There have been periods where, I mean, to be honest, historically, it doesn't seem like the unemployment rate like factually speaking, the unemployment rates have been the lowest it's ever been post-COVID, so like December 2021 onwards. However, 4.3% is the highest it's been since let's see here, since September 2021, March 2020 when COVID started, and August 2017. There were very high unemployment rates from November 2021. I mean, I think this was when the recession started, so a lot of people were unemployed. Then it just started to gradually go down. But like right now, obviously the unemployment is going up, so people now fear that we are entering a recession potentially, because the unemployment is just going up. Now, I am not sure if we're in a recession or not, because again, like, I need to see, there has to be more than just the unemployment figure to decide this. Now, there actually is something called the SAM rule, where if the unemployment rate ticks above 0.5% from a trading period compared to the previous year, that's what triggers the recession. Like, the recession is essentially underway. And I think there's an article that actually details this as well and shows like in history, the Samuel has never been wrong. So I don't know if I can get that up. Okay, it might not be easy to get on here. Oh, here we go. Right, so it's this link here. Okay, so here we've got some information of when the recession happened after Samuel was triggered. Now, it's not completely like on the money. What it is that the Samuel will trigger before the recession starts or after. Mostly before. The only time it was after was in I think 1960, which was 5 months after the Samuel triggered. So in this situation, this would have to be another case where the recession starts a couple months later, because we're not official. There's no official declaration that we're in a recession. Now, usually the recession is decided when there's 2 negative quarters of GDP growth in a country. But in the US, GDP growth has been positive. So, but a lot of people have been saying that the GDP growth has been funded by debt. There was a comment that I found that talked about this, but I can't remember what they were saying. See if I can find it. Okay, this is the comment. GDP growth is being driven by government debt. If you look at the past 3 years, added 8 to 9% of GDP to debt each year. Averaged down about 3% GDP growth and averaged a little over 3%, 5% inflation. Pumped 2 trillion of debt-fueled spending into the economy. And my question is, why do you only get 2 to 3% GDP growth? So, it does kind of make sense, obviously. I don't actually monitor the US's government spending, so I don't know how it actually works. But essentially this is a significant figure. Basically, government debt has increased by nearly 10% of the existing GDP annually, which obviously is quite significant. Sorry. And then it really makes you wonder, what is the real GDP? Because they do report real GDP figures, as you'll see here. But I don't know if this mentions debts at all. This is just adjusted for inflation. So 2 quarters of consecutive negative GDP, real GDP growth, officially signifies a recession. So yeah, obviously the recession, the COVID recession, that was reported in first quarter of 2020 and 2022. Sorry, 2020 and Q2 2020. The first 2 quarters of 2020 had negative GDP growth because we were in a recession related to COVID. But since then, and also quarter 1 of 2022 had negative GDP growth, as did the second quarter of 2022. So technically we've actually already had a recession under the Biden-Harris administration, which is quite interesting. Because that's, again, 2 quarters of negative GDP growth. Keep in mind that the stock market tanked during this period. So, but obviously recently, if you look here, we don't have negative GDP growth. So we're not officially in a recession like what happened with COVID and in this one, which I don't even think was officially declared a recession. And also keep in mind the unemployment rate was also not as high back in 2022 as it is now. So it can't just be 2 quarters of GDP growth, negative GDP growth, that signifies a recession. But again, I think it's when there's 2 quarters of GDP growth and then there's other economic indicators that suggest that a recession is approaching. So like, I guess this is not I do like this site for the charts. It's not good enough. Like, there has to be a better site for this. I don't really like this site, but it seems to be, I don't like this site. This site is so messy, like all of the pop-ups. God. Let me see if I can find another one. Oh, Statista as well is annoying. I need the full real GDP growth rate. Is this good enough? I'm not sure, but we'll use this for now. I don't think I can change the. Oh yeah, it looks like I can. Okay, there we go. This is more like what I want to see. So I wonder if we can change this to be the home page. Okay. Let's home this. Okay, yeah, there we go. Now it's fixed. So basically, here we go. We got those figures here. Now, if we do it from a max perspective, we can see that GDP growth has been fine for pretty much a decade, except for COVID and this 2022 instance here. And then there's also some instances here throughout history that we can see where it's dipped and entered what appears to be recessionary territory. Now, obviously it's full screen now. 2008 was kind of strange, but there was negative GDP growth here, then it was positive, then it was 4 quarters of negative GDP growth. This was during the 2008 recession. There was negative GDP growth in 2011, there was no recession. Likewise in Q3 2011, no recession, and then Q1 2014, again no recession. There has to be 2 quarters in a row. This wouldn't have been a recession even though it was negative. But after 2 quarters in 2028, that was a recession, especially with minus 8.5%. That is a massive danger zone. And this COVID one is even more insane. Then we can see, but from what I can tell, there was not 2 consecutive negative GDP quarters during the dot-com bubble burst. Although it is worth pointing out that to go from 7.5% GDP growth to 0.4% in 2 quarters is a big difference. That's almost like a recessionary drop. So maybe it's not always requiring a negative GDP growth, rather just an insane drop, because the GDP growth was high for several years before that until Q1 2000. And then there's some instances in history again where we've got 2 quarters of negative GDP growth. So obviously it's probably harder for me to make sense of the older instances because I wasn't alive obviously during these previous instances of negative GDP growth. So I usually only look at like 2000 and onwards because that's when I was alive and understood what was going on. But that's that. So yeah. Let me see if there's anything that I can add here. So I'm not sure when the next set of news is coming out on the economic calendar. Again, there's a lot of trading days that has to go until we even get more news about how the economy is doing. But from what I can tell, things don't look too positive. If the next unemployment rate report is another increase compared to the 4.3% for this month, it's going to look problematic. And then I guess any more news about jobs added being less than 4, and what else could I keep in mind here? Inflation must decrease based on this unemployment data. It must decrease, because if it doesn't decrease, then what was the point of getting people out of jobs if the prices are still going up to that extent? It doesn't make sense. So a lot of things have to go in favor for the stock market to become bullish again, pretty much. But in essence, you might be wondering, oh, a recession might be coming, guys. This is looking kind of scary. And you might wonder, okay, should I sell my stocks? Because looks like a recession's coming. Now, the answer is whether you sell your stocks or not, because of the recession, depends on how long you've owned your stocks, and it depends on what stocks you own. So I've actually been putting money into stocks since April into another investing account, and it's been 11% down since I started. And I started on the basis that the stocks were correcting. I never ever bought a stock that wasn't in a somewhat correction phase. Like, I never bought any of these stocks at all-time highs. All of them had been there had been at least three red daily candles before I actually bought into it. But obviously they still kept going down, because it's not just a few days that we've been in red. We've been in red for weeks now. So obviously a lot of this is in reds now. It is worth pointing out though that it is very specific stocks that are in red, not just all of it. Like, for example, the financial stocks are in green. This industrial stock that I bought recently, a utility stock I bought recently, was in red until the last trading session. This healthcare stock, Lantheus, I bought after it was after a somewhat of a correction. It was way past its all-time high. That's up 22% now. It was up 40% in a day, actually. So it has actually corrected. But it went 40% up in a day after some news. ASML, Nvidia, Camtech, ACM, all tech stocks. But Camtech and ACM have China risk issues, especially ACM, because I think 90% of their businesses in China. I've actually put like a mark there. Actually, no, I haven't put a mark. I need to put marks for those ones to represent how much of the company's sales are in China. But I thought ACM was a good stock to buy. However, it's very undervalued, but the problem is, because the market hates Chinese stocks, it might always be undervalued. So that's just something that I have to look out for, pretty much. What else here? And then these industrial stocks like MCore, Comfort Systems, Furtive. Again, well, actually Comfort Systems is in green, but it could go in reds, of course. But these stocks are all down because, again, they are linked to tech companies, because they build facilities to help tech companies create their semiconductors and other AI technologies. So they're all linked pretty much. IES, MCore, Comfort Systems, Furtive. And then Celsius is down because of a report that sales they were losing market share, I think. And then international US is down because the oil price has tanked recently. So everything's got its reasons for declining. Like I said, it depends like when you bought it. So obviously based on this, I've not put much cash into these, so if they go down more, it's not really a big loss to me. But if I had £1,000 in it, I probably would be more alert on like, okay, should I sell and then buy it back at a lower price? I've just put these on there as placeholders just so that I can monitor how they're performing, and then when I want to put in like the actual amount of money that is a bit more moderate, then I can put it in. But like I said, I am cautious of the valuations. They are improving, so obviously if the market continues to correct for certain individual stocks, then I might look into buying into it. But of course, if the whole market keeps going down, all these stocks will, because a lot of companies own these stocks in ETFs, funds, and as a result, people that buy the funds, are investing in these properties indirectly. And so, what will happen is if people sell off the funds, then all these stocks will go down. That's just how it works. So overall, I would say whether to sell stocks now in anticipation of a recession, it's hard to say, but it is very possible. I personally can't see us going as low as the 2022 bear situation. I think it's just unlikely. I think we could definitely go as low as well, actually this is completely wrong. I could possibly, the Nasdaq could go as low as here, back where it was in January. That's possible. I am not sure about it going as low as here though, which is September. It's really hard to say, but I don't think. In fact, this was the high. I think 16K was the high, wasn't it? So, I can't actually see it going as low, because it took January for it to recover from where it was in November 2021. I definitely could see a correction happening to 17,000 though. I could definitely see that happening. And that also aligns with the overall upwards trends. So if it was to correct that much, it would be a 15% correction. Like I said, I can't see more than a 15% correction. If a recession happens, yes, it could correct more than that. But how likely are we going to go into recession? We still need more data to support that sentiment. So again, I'll try and look into more information that I can get on this. And if we're really heading into a recession, then depending on your average cost per share, you might want to sell stocks and buy them later after the recession subsides.